Yep, I think it's time. Let's get started. If we get more people joining, they can directly join in the session. Yep. So hi everyone, welcome to VNMT Solutions webinar on intercompany transactions today. My name is Yash Mehta. I work as a lead functional consultant, currently based in Brisbane, Australia, and I specialize in end-to-end NetSuite implementations. Before we get started on today's topic, I would like to in I would like to discuss more on little bit talk about the company which I work at, which is VNMT Solutions. So VNMT started in 2011 in Melbourne, where our headquarters is based. Over the years, we've expanded in multiple offices in India, in Pune, Jaipur, Gandhinagar, and we also have an office in US. Oh, VNMT is an ERP and consultancy solutions company. We are NetSuite and Celigo partner as we carry out our end-to-end implementations, build unique solutions, and also do third-party integrations. We currently have our own products in the market. For more information, please have a visit at vnmtsolutions.com.au. As you know, NetSuite is a small but growing community. We have started these webinars today, marking the first one, but not last for sure. The idea is to meet, collaborate with everyone, and provide knowledge and grow together. So, as you know, today's topic is intercompany transactions. So, let's get started. So, as I mentioned a little bit about VNMT, we are Oracle and NetSuite partner. We've been in the business for about 13 years now and have been growing at a pace. Yep. So today we'll be looking at intercompany, different use cases we face with the same, and how we can tackle different scenarios. So in a scenario where a large company, a large organization with multiple subsidiary is trying to manage transactions between their own entities, what can we do in that? NetSuite has provided or built a solution called as intercompany transactions, which lets them create journals, transactions, orders between the entities for a seamless accounts, taxes, pricing, and stock management. That's intercompany. So we'll go to our NetSuite account and see how we can set up intercompany. Go to your NetSuite homepage, hover over setup, go to company, enable features, go to the accounting subtab, scroll down, and you will see these two options, which are automated intercompany management and intercompany framework. Now, these are the two settings which are required for you to enable intercompany in your NetSuite account. Having this automated intercompany manage would also allow you to have automated intercompany eliminations while you do your period close management. One thing to note over here is that once these settings are ticked, they cannot be switched off. Now that I have done my intercompany setup, next thing I need to worry about is setting up a new subsidiary for my eliminations. So you go to setup, company, scroll down to subsidiaries, and create a new subsidiary called elimination, which I've already have. How to create an elimination subsidiary? Click on new subsidiary, enter your elimination, and make sure to have the elimination checkbox ticked. This will automatically create an elimination subsidiary. Okay. Next thing we need to do is create our accounts payable and accounts receivable. Now these are different to your original or native accounts payable and receivable accounts. You go to lists, accounting and accounts. In this case, I have already created my intercompany accounts receivable and intercompany accounts payable. I'll open my intercompany accounts receivable. The only difference between normal accounts receivable and intercompany is that this checkbox needs to be ticked on. If it's not ticked on, it will not perform the auto elimination and it won't be registering your any transactions. Yep. Same activity would be needed for your intercompany accounts receivable, that you need to have your eliminate intercompany transactions checkbox ticked on. Once all of this is done, you go to your setup, accounting, scroll down to intercompany preferences, and the accounts that you have created, you have to set up in your receivables default account and payables default account. Once you finish all of this, your intercompany setup has been completed. Now let's move on to our first use case for today's topic. In a use case, an Australian subsidiary needs to buy finished goods from a UK subsidiary. How do we manage pricing, tax, inventory update in a single step? To do this, our solution which NetSuite has provided is called managing intercompany sales orders and purchase orders. To do that, we go to NetSuite, go to list, relationships, customers, and vendors. Both are required to be created. Let's create a new customer. Yep. Once you have set up your intercompany, a new form would be added to your customers, to your vendors, which would be called as intercompany customer form. You create a new customer, put a name as ICC, which stands for intercompany customer, for subsidiary Australia. Yep. Primary subsidiary is the subsidiary that you want this customer to belong to, where I would select Australia as the case, because in this use case, Australia is trying to buy from UK. As UK is our procurement side, I will put that as my represent subsidiary. Yep. Setting the represent subsidiary is very important, and setting the correct represent subsidiary is even more important. Once your customer is set, you save it, and let's go and create a new vendor. We go to lists, relationships, and new vendor. Intercompany vendor or subsidiary UK. So I'm creating a vendor which represents the UK subsidiary. So my primary subsidiary would be UK over here, but it is going to be transacting with Australia. So I will be selecting, 1 second. Intercompany vendor, subsidiary UK. Primary subsidiary would be UK, and it would be transacting with Australia. So I'll select represent subsidiary as Australia over here and save. So my customer and vendor, which would be transacting each other as my entities, have been created. Next step is to go to transactions, purchases, enter purchase order. Guys, if any of you have any questions, please feel free to interrupt me, and I would try to help as much as I can. So you select your vendor. We have created intercompany subsidiary UK as a vendor. It has already pulled up all my values from there. Select the location that you want to be selling the stock from, which is London in this case, and select the item. One thing to note over here is that we are uh, um, the opposite side of subsidiary needs to have the same stock that you are trying to buy from here. Hi, Shrish. I can see you've raised your hand. Do you want to jump in and ask your question?
Yes, hi, yes. So, I guess there is also, I mean, NetSuite also provide a facility to automatically created intercompany vendor and customer, I guess. I'm not sure, I heard somewhere. So instead of
I
creating,
actually have never had the opportunity to see that automated option. I have been using intercompany for a while. If NetSuite
Mhm.
has that setup, that would be really good. According to my knowledge, I don't believe they do have it at the moment.
Okay, sure, no problem. Thank you.
Yeah. Thank you. Thank you, Sharish. Do you have any other questions? Please feel free to jump in. Yep. I was creating my purchase order. One thing to note over here is that whatever item I'm trying to buy, the sales side of the subsidiary needs to have it in stock. Otherwise, this won't work. Yep. So I create my purchase order. Let's order 25 and save. Yep. Next one, we go to transactions, sales, and manage intercompany sales orders. So in a normal NetSuite scenario, you would be creating a separate purchase order, separate sales order, and trying to link them together. Whereas if it's an intercompany, you only need to go to this page, select the customer that you are trying to create an intercompany relationship with. So which is ICC, intercompany subsidiary Australia. Select your purchase order for which you are trying to create a sales order and click on generate sales order. This does take about 30 seconds to create a sales order in background, and you can also do bulk processing. So at the end of the day, all the movement you had for your buying and selling, you can create multiple sales order together. Yep. So our sales order has been created. I'll quickly show you what it looks like. Yep. So this sales order was automatically created with the same quantity available over here. Yep. Let's go back to our presentation and have a look at the next case. Next case is how do I transfer inventory from one warehouse in subsidiary A to another warehouse in subsidiary B without recording a sale. So a lot of companies, they do want to move some stock, but they don't want to create any sales because a real sale has not occurred, a real purchase has not occurred. What we can do is we can use an intercompany transfer order in this case. As the name suggests, intercompany transfer order is a normal transfer order, but between two entities or two companies. To create one, you would go to transactions, inventory, and intercompany transfer order. This page would seem very familiar if you've been using transfer orders, except of course the name over here and the options to select two subsidiaries. So you would select your from subsidiary as just subsidiary, which is let's move some stock from Australia to UK. Now, from which location do you want to move it? Let's move it from London to Melbourne. You select your Incoterm as DAP. Yep. And you add in your items that you want to move. Yep. Now you can see there's two options, which is use item cost as transfer cost and transfer price. So this is a personal preference or a company-based preference. Do you want to use the cost at which this item is? So if I open this item, this item has costed the business $10. So each unit is $10 worth. If I take this one, it automatically understands that my moving cost is $10 for each item. If I want to use a different, I would untick this and enter my own transfer price. Yep. Once this is set, I would save the transfer order. Yep. Now, a little bit different from a normal transfer or inventory transfer that you need to fulfill and receive on the same transfer order over here. So I click on fulfill. I would be fulfilling it. So I would be picking, packing, and shipping it from my from my Melbourne location. Once I have picked, packed, and shipped from my Melbourne, I go back to my transfer order and I click on receive to receive the stock to my London location. Yep. Same how we normally add landed cost, we can do the same over here if required. Save. Yep. If I go to the GL impact, you would see $10 because I moved only $10 worth. Um, and my transfer cost on my transfer order was set to zero. It used the item costs. Yep. So that's our intercompany transfer orders. If there's any questions, please let me know. Otherwise, we'll be moving on to the next scenario. Now,
Yes, how
this
does
is
it
the
work? How does it work in case of batch items? I mean, is it similar like the normal item receipt? The similar way we are populating the batch number and inventory detail, anything?
Yes, absolutely. Sorry, I can't see who I'm talking to right now, but it would be running in the same way. So you would be fulfilling a particular batch. So let's say you're fulfilling batch number 1 to 3. If it's from a bin, you would also select a bin, and you would be receiving it into a receiving the same batch and assigning it to a different bin or a bin to the new location. Yep. So whether it's a serialized item, number item, the process would continue and you'd just be entering the inventory detail tab as you usually do.
Okay,
Yeah.
good.
Um, Anyone else? If you've got any questions, please jump in. Yeah. Moving on to the most popular scenario, which is how do we split costs between our businesses? Whether it's IT costs, rent, insurance, how do we do that? So we use intercompany, advanced intercompany journals in that case. Now,
Yes, sorry,
yep,
sorry to interrupt. Can you just explain a little bit more
sure, sure,
about
please.
these cost thing? I mean, this is a new term for me actually.
Yeah, absolutely. So costs, what I mean by is that, let's say that you have two businesses, right? And one of the business is the one who ends up paying the rent always. But you want to split the costs and assign it to both the businesses. So yeah, $100 rent, 50 you want to be consumed by one business, 50 on another business. So in that case, we will be using our intercompany advance journal. Our costs could be rent, it could be insurance, it could be a vehicle. Let's use an example of vehicle. So you have two businesses, but you've only bought one car, but you want to split the costs between the of the same car between two businesses. But your payments are always going out from one. So we use intercompany advance journals to split or allocate costs to the second business as well. Yep. In the same example, I would like to show you on NetSuite. I hope that would make more sense. So I go to transactions, financial, and journal. Now you see on here, there's two options, but in a lot of your accounts, you would see three options, which would be journal entries, intercompany journal, and advanced intercompany journal. As this is a new account, I only have two options. The old intercompany journal entry is a deprecated, so please don't use that. Just use advanced intercompany journal. Now, very similar logic to our journal, but there's a few rules that we need to know about advanced intercompany, which is we always need to have at least 4 lines of transactions in advanced intercompany. 2 lines of subsidiary 1, 2 lines of subsidiary 2. Yeah. The first subsidiary you would be selecting is a subsidiary you transacted already from. So in this case, we are using an example of car. A car bill was paid by Australian subsidiary. We'll use that as our header or transacting subsidiary. We go down to the line level information and keep the subsidiary as Australia because that's the primary. Select the accounts receivable. In this case, we won't be using a normal accounts receivable. We'll be using intercompany because Australia is supposed to receive money from UK. And we put $1,000 worth of credit for the same. Yep. You will be entering your vendor and, at the same subsidiary, add the account, say, let's say motor vehicle cost, it will automatically pull up the same amount. Next, you would be adding the account and the subsidiary at which is supposed to be paying the first subsidiary. So intercompany payables account would be $1,000, the same amount. And it would be debited from your motor vehicles cost. That's pretty much our intercompany. What has happened is that my costs have been distributed between Australia and UK now. I will be saving this. Oops. So I forgot to add the customer in this case. So I'll add intercompany customer and save. We've got an extra column over here, which is due and from. It helps you understand from where the money is going. So Australia would be receiving money from UK, and in this line, UK would be sending money to Australia for the $1,000 worth of payment. Yep. So that's our advanced intercompany journal. Now there is another financial field to be understood over here, which is elimination of these entries that we've done. Now NetSuite has allowed us to do auto elimination. Every time you do a period close, we have an option to automatically eliminate these, which will create a reversal journal and eliminate the intercompany payables and receivables account. Yep. That's our third use case for today. If you guys have any questions, please feel free to let me know. But yeah,
Hi
that's
Yash.
the last question. Hi.
Hello, Yash. Hi, Rishikesh this side. So I have one question. So like, how does NetSuite handle the intercompany expenses allocations in multi-currency environment? Like we have UK pound and Australian dollars.
Mhm, mhm, mhm. Sure. So we would be in my current example, I have not used different currencies, but you can use the same options that we've seen today and do our intercompany journals, intercompany transactions. Yep. So your primary would be Australia. So you would be doing sending asking for money in Australia, but you would be paying in a different currency.
Okay. Yeah, thanks.
Thank you. Anyone else? Any questions? Perfect. Yeah, I think that was our today's session. This was our first webinar conducted by VNMT. Also, VNMT, thank you for giving me the opportunity to present the same. But we would like to collaborate with other companies, other individuals who would like to learn more or would like to showcase their talent. Please reach out to us. If you have any questions, you can email us at VNMT or you can directly email me, so which is Yash at VNMT Solutions. Yeah, that's it. If you guys have any comments or questions, please reach out. I'll stay on the call. Rest, thank you so much for your time.